Hi, I'm Guy Schwartz, and welcome to the next episode of Call GMS. In this episode, we're going to talk about I want to buy a house, but what's stopping people from buying houses. So the number one, I'd like to buy a house, but I don't have the income. Well, there's a couple of things you can do if you don't have the income. Number one, you can get a co-borrower. Hopefully somebody will co-borrow with you, maybe your relative, your parents, your brother, sister, whomever, and we can add their income into the pot. Unfortunately, we have to add their debts as well. So if you're going to find a co-borrower, we need somebody that has decent credit and makes more money than they spend. You can buy a less expensive home, which sometimes can be a problem because you don't want to commute for 4 hours a day. I get it. And you can put more money down if you have more money down. Next, rolls right into the down payment issue. I would want to buy a home, but I don't have enough down. Well, you can do a VA loan if you're a veteran. That's the best loan in the world. It's no money down. You can get the seller to pay you closing costs, so you can get in virtually for zero. The other type of loan you could do is a conventional loan with 3% down. You can do an FHA loan with 3.5% down. You're going to have mortgage insurance, but it's a way to do it. You can get a gift. That's a great way to buy a house with if you don't have enough down payment. There are programs such as down payment assistance programs. One is called the GSFA, Golden State Finance Authority. However, there's no free lunch. They're going to charge you a higher rate for giving you money for your down payment. And that program is good if you have absolutely no money. If you have any money for down, you're better off taking a higher rate and getting a credit for your closing costs if you're tight on cash to close. The next, I want to buy a house, but is credit issues. There are some credit issues that are easy to take care of, and there's some that are harder to take care of. So if you have too much debt, you got to get that paid down. Get them down below 50% of the credit limit, and that will bring your score up. Some people say 30. 30 does help a little bit more, but getting them from like 97% utilization down to 50% utilization will get you the big bang for the buck. The other one is not having a good payment history, which is really much harder to deal with. And there are two not having a good payment history scenarios that I want to talk about. One is when you have a life event where you just have a blowout year. You were sick, you couldn't work, the credit cards got charged up, you're back on your feet, and now everything's been good for a couple of years. That is one type of derogatory credit event versus you're a sloppy payer. You have a 30-day late here, 30-day late there, 60-day late here. That is much harder to deal with than the one life event. So hopefully you're not a sloppy payer, you just had that one life issue. If you don't have a 2-year job history, that could be a problem for you qualifying for a loan. If you're a student and you just started working, if you're working in the field that you went to school for, you don't need to have a 2-year work history. They use the education time as part of your work history. The other one that could bump you out is if you started a commission job or you became self-employed. If you're going to go self-employed, get the house first. When you get the keys, then start your business. It'll be much easier for you to qualify. All right, hopefully you found these tips helpful. Kirk out.